Jerome Powell and the Federal Reserve are going to be decreasing their federal funds rate 25 basis points or 0.25% in November. This is an important index because this drives mortgage rates, but more importantly, this shows us what's going on in the economy. When the Fed is making these decisions, they're looking at the critical things happening in our economy. Why is this important? If you're a business owner or investor, knowing what's going on in the economy helps you understand whether you need to be leaning in right now, investing more, or holding back. So let's dig into the numbers that the Fed is looking at right now to determine what's going on in our economy. Now, the number one index the Fed is looking at, and we've heard it over and over again, is inflation. Inflation kills the value of our dollar. It decreases our actual value as we're spending and buying things. Now, the Fed is doing a good job at taming inflation. That's why we've had higher interest rates. Inflation right now is trending from 2.3% year-end number in August to now a 2.1% targeting for the year-end in September. In other words, the trend is going downward. We're seeing less and less inflation, and the Fed's target rate is actually 2%. So we're really close right now where the Fed is targeting, and what that means is the Fed can start lowering its rate now back down to where they think is a neutral rate. See, when inflation is going off and we're at a 5% rate of inflation, the Fed increases interest rates. But when inflation starts coming down, the Fed wants to bring back down the interest rate to a more neutral area. And right now, the Fed says neutral is about 3%. The current federal funds rate is sitting at 4.83%, so as that goes down 25 basis points or 0.25%, that's going to put the federal funds rate at 4.58%. Now, the next stat that's really important right now to determine what's going on in the economy is the savings rate. There's an upward revision in the savings rate, putting it at 4.6% right now for the year. That means 4.6% of disposable income that Americans have is being saved. We were above 5% from 2014 to 2022. We want to get this back above 5%. We're not there yet, but we're getting a lot better. And the bottom line there is if Americans are saving more, that means they're feeling more comfortable with their income and their spending and expenses. It means inflation is more in check. Now, the next indicator is huge. This is jobs, right? Jobs are huge. What's going on in the job market? Now, one of the indicators out right now from last month is unemployment claims. Those are down from 230,000 in August to 216,000 in September. So we're seeing unemployment claims going down, again, meaning there's more stability happening in the job market. The Fed likes that, which again gives them more incentive to continue to lower the federal funds rate down to a more stable rate. And again, the target is about 3%. Now, the final data point is spending growth in the US economy. Spending growth is up from second quarter 2024 to third quarter 2024, 2.8% to 3.8%. This is a good indication Americans are spending more in the economy. So right now, all these factors are looking to a favorable economy right now. We're on the upswing. Interest rates are going to start coming down. This is good for Americans. And if you're a business owner or investor, there's good signs to go invest in your business or to make other investments. And for more information on how to learn and build wealth, please make sure you're subscribed to my channel. I'm Matt Sorensen. We'll see you next time.